I'm Andrew Marquez.
And I'm Guadalupe Solis, and today we'll be presenting the Ford company analysis.
So we're going to go over our company analysis report 1 and our company analysis report 2, which we submitted through Blackboard. And so we did ours on Ford Motor Company.
Ford designs, manufactures, and services cars and trucks. The company also provides vehicle-related financing, leasing, and insurance through its subsidiaries.
We went through some of their financial statements, particularly for question number 3. We went through their income statement and their balance sheet, and we were able to pull off a couple of their earnings. So we had the decision on whether to do 4 years, the last 4 years, or we could do the last 8 quarters, and we went with the last 8 quarters. All of these that say done in Excel, we've managed to put them in different folders within Excel. So at the end of company report 1, we will go along and we'll take you step by step each folder that we have, and we'll just give you a little rundown of those at the end of company report 1.
For number 4, we went through the income statements and found the current ratio as assets divided by liabilities, and we got the ratio to be 1.16. Our quick assets is 0.99.
And so we also were able to get the inventory turnover, which is going to sneak up on us in a little bit. And so for that, we got 13.1, which we found to be pretty modest. We were also able to get the stock price, and this was for the past 12 months, so for the past year. We also got these on Excel, and what you're going to see on Excel whenever we show it to you, it will have a lot of rises and downfalls, and we were able to list major turning points and maybe like a couple of historical factors that happened that caused it to either shoot up or to shoot down.
Right now, the stock is currently trading at $5.21 a share. Due to the current COVID-19 pandemic, the stock has gradually declined and is starting to slowly pick up.
So we also did our relative valuation versus some of their main competitors, and so for that we picked 2 other companies, and you'll be able to see that as well on Excel. And when we do show you the Excel, you will find it on the RV. And so
to summarize Ford's performance for the last day, the previous close was at $4.87, and as of today, March 8th, the stock climbed to 5.21, increasing by 7% approximately. The main points, ratios we want to see are the beta, our EPS, and the Yahoo Finance's evaluation of the stock. The PE ratio, there's none. And for the beta, we would think it's relatively low, being 1.25, being below average for the industry. Our earnings per share is negative 78 cents, which is actually is not that good compared to the industry.
And from there, we're going to take it on to the company outlook. Now that we gave you a little bit of their history, we're going to give you what they're projected to do. And so right here, you can see we have an overall innovation score, and this was based off of TRIA's Innovation Index, and it just kind of provides a little bit of the company's R&D, their research and development, and it based it all in here, and they were able to get a 95 out of 99, which is relatively good. And if we go on to right here, you can see the baby blue line is the sector, and the darker blue line is Ford, and you can see they've taken a drastic drop. We may be able to relate this back to maybe the coronavirus and how that pandemic is handling our things. And if we go a little bit lower down here, we can see the earnings per share. Those are their estimated, in other words, their goal. That's what they're trying to get at. And as you can see, the red means that they missed it. Green, they were able to achieve it. So you can see they're about 25% hit or miss. This is based off of 2019, 2020, quarter 2 and quarter 3, quarter 4 for 2019, and then we got quarter 1 right here, 2020. They missed it as well, but right here's quarter 2. We're waiting on that one. And then as we take it on right here, you can see a little bit of their risk score, and this is based off of environment risk score, their social risk score, and their governance risk score. So based off of this, they're on the 53rd percentile, and they get a 3 controversy level. These significant developments, later on towards the ending of the report, once we show you the Excel files, these would be some of the things that are listed in our Excel file that shoot the stock price up, or they may shoot it down.
We were able to find the WACC of Ford on Finbox, and the estimation of the WACC was 7%. And the definition of the WACC means that if it's higher, it's relatively more risky for the company, and if the WACC is lower, that means they're less at risk, which also signifies that the investor will be more attracted to it. Based on this bar chart, we can see Ford is in the lower percentile, which means that they're less at risk compared to the industry and their competitors such as Tesla and GM.
And then from these, so we were able to get the WACC for these. We're also going to give you a little bit of a more general view of the WACC for different companies that are still within the same sector. And so the sector that we're looking at is the consumer discretionary sector. And so from there, we got the WACC for the country is the US. We used about a total of 1,344 constituents. And so the minimum was the 7%, which if you notice, Ford was actually at that 7%, so they're operating at the minimum. And the maximum was 12.5%, and the medium's about 8%. So I guess you could say we're underneath the medium, and most importantly, the average, which is the mean, is 8.4. So we're operating underneath the average for our sector. The standard deviation deviates about 1.3%.
We'll now analyze the total debt for Ford. The Ford total debt last quarter was $156.7 billion. The total debt for the past fiscal years, December 2015 to 2019, averaged $148.2 billion. The median total debt was $154.2 billion. And looking back at the last 5 years, Ford's total debt peaked in December of 2019 at $156.7 billion. The total low was in 2015 at $132.9 billion. And I will now hand it over to Andrew to talk about the total equity.
So from here, we're just going to summarize a few insights for the debt to equity. So right here, you can see the bar graph. Everything's pretty low. This is super high, December 2011. So here's a little bit about their summary for their performance. Their debt to equity for the last quarter was 472.3%. Their debt to equity for the fiscal year ending in December 2015 to 2019 averaged approximately 457.8%. So we looked back into the last 5 years for their debt to equity, and we can see that it had peaked in December 2016, and it peaked at approximately 490.1%. That is a pretty big rise from 457.8%, which just happened from 2015 to 2019. So Ford Motors debt to equity decreased in 2015, and it decreased about 4.9%. And in 2017, decreased another 11.5%. And then following 2019, it decreased about 1%. And finally, it increased in 2016 at approximately 5.7%. And then 2019 for last year, we had about 10% increase. So we can see it's been kind of increasing within the past couple of years. And so talking about their increasing and decreasing, we're also going to get down a few major company news, and those are just things that happened that made their stock either shoot up or shoot down.
Out of the key events for Ford, we chose that the discontinuation of all automobiles in their lineups. They chose to stick with the trucks and half cabs because they believe the consumers in America don't need the automobile anymore because they are more prone to buy trucks. Let's see, by 2022, Ford will stop all production and they will keep their main staple, the Mustang, and they will also convert that Mustang into an EV vehicle.
So after that key event, this is mainly what we're going to refer back to for those key events. For every key event, we managed to put an H, and that was just like a turning point, as you can see. at this one right here, we had a very sharp increase right here. We managed to get through all of these, as you can see, very volatile. So we believe that that one was the major event. And then as you can see down here, we carried out our ratios, as you can see, through all of these. And our source for these, we actually got these off of the Bloomberg, so they're very, very correct. And then we got our RV right here. Very medium Ford Motor, General Motors, as we said before.
You want to, you don't want to.
Right here, and then we do have Chrysler right here. And then from there we had our GP line. And this is where we just spoke about all of the
What do we have to do?
stock price. And then from there we had
¿Qué hacemos? Terminar sus tabiques, mover esa arena, tirar esa tierra con tu Pablo. We have a lot of things to do. Some more.
We also had their balance
You know?
that we did a couple snapshots of everything. And we did go off
We
of
do
this
something.
here.
Salud.
So we get all their balance sheets down. And that's mainly what we have in their Excel. And all of these came off of Bloomberg, straight from Bloomberg terminals. Okay, now we're going to go ahead and conclude our answer. So our recommendation was basically based off of their inventory turnover, which is 13.1. Unfortunately, that's 0.4 below the average for the auto industry. And our return on equity has dropped from 10.28 to 0.14, which is immensely low. And that was from 2018 to 2019 as well. And so right here we can see that the profit margin, of course, dropped from 2.29 to 0.03. And so although all of these are dropping, we do see that it's expected to have a rise. So for us, this would maybe sway our recommendation to maybe sit on the fence a little bit longer and just to see if it plummets even more or if it goes higher. And so that's our recommendation.
This concludes our presentation. Thank you.